following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the August 11th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic weekend. I know I did. Let's make sure that you and I, that we do everything that we can do to have a magical and magnificent Monday. And for those of you folks that enjoy golf, what a great weekend as the majors came to an end out there. What a great PGA tournament. Congratulations to Rory McIlroy. How about that for a quick brain fart today? Maybe that's an indication of what's going on. But what great playing by Ricky Fowler and by Phil Mickelson out there, and all the way till dusk, playing there in the dark. So what a great weekend that was if you were a golf fanatic. Look, my outcome here during the next couple hours is pretty simple. It's to share with you extraordinary tools in trading. Tools that help us to identify where price is targeted, where price is headed to. Tools like the A to B equals CD tools. We look at Fibonacci retracements and expansions because the markets are always retracing and expanding. We look at Japanese candlesticks, that's for sure. And we'll look at every tool that we possibly can, especially the tools of psychology, because trading, really, when you think about it, 80% of trading is psychological. And the other 20%, well, it's in between our ears out there. So it's all psychological. Hey, here at TFNN, we've got 10 hours of live programming each day, and it's interactive. That means you can call into any talk show host. You can give me a call at 877-927-6648. Internationally, our call number is 727-445-1044. And together, you and I, we can go hunting for bulls and bears. So let's begin that process. It is Magnificent Monday. This is Tiger Financial Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures. They're trading up 81 points, trading out at 16,559. S&P futures up 10.25 points. She's trading out at 1934. NASDAQ futures up 23 points, trading out at 38.97. Basically, Russell 2000 up about 7.5 points, trading at 1133 and change out there. U.S. dollar index up 3 pennies, trading at 81.48. Gold back $3 right now. She's trading out at 13.08. Silver up about 2 cents, trading at 19.96. Light sweet crude back 6 cents, so flat market out there. Natural gas trading higher this morning, about 0.75%. Let's take a quick peek around the globe. Let's see what we have going on over in Europe this morning here. The DAX on fire. Of course, we led that. The DAX traded well off its session lows on Friday. Anyways, they're up about 1.75% right now, up 155 points. The FTSE up 57 points, up nearly about 9/10 in Asia last night. Big give back on the Nikkei, or not a give back, really a great good reclaiming of the awful day that the Nikkei had on Friday. Yesterday finished up 352 points, not making up the entire gain out there, but still up 2 3/10%. The Hang Seng up 1.25%, up 314 points. The Shanghai also up 1.25%, up 31. So, all right. So where do we begin our day? I say we begin our day first. First order of business. Let's take a look at the daily chart here for the ES Mini, and let me go ahead and put some. Let me go ahead and put a couple of studies on here. That might make them. Oops, I didn't want to do that, actually. Let me go ahead and put a couple of studies, not having it prepared. How dare I? So as we take a look at the ES Mini, we'll take a look at the daily chart. One of the things that I want you to notice here about the trading session on Friday, very powerful. Very much a robust rally out there. Very much a widest ranging bar. Remember, in the overnight hours, we saw futures trade quite a bit lower. In the case of the ES Mini, they got down to a price point of 1890.25. But they were doing it, as I took a look at my newsletter Friday morning, said we're going to have a robust rally. And that we most certainly did. And the reason was because we were taking a look at charts. We take a look at one of Stevie's favorite patterns out there. It should be one of your favorite patterns as well. So in price scale, they price what I call Rhodes momentum indicator signal. It's the entire package out there. You see, I can find on many charts when price moves higher or lower on less relative strength. That alone is not the pattern out there. But you put it together with Stevie's formula out there, and it'll identify good tops and bottoms. Now what our role is, now that we know that we've got a decent bottom, and by the way, Friday's session on a daily basis, we'll take a look at the weekly basis as well, but Friday's session on a weekly basis is a key reversal session. What's a key reversal session? I'm glad that you asked me. You really need three components to have a key reversal session. Number one, you got to be in an oversold or overbought condition. Well, in this case here, if you take a look at the relative strength reading, it was down around the 33.40 level. Anywhere in the lower 30s is starting to get to be oversold. So that's the first element. Okay, check that off our list. Second element is the price move intra-session during the day needs to exceed both the prior day's high and low. Well, if you take a look at that, we most certainly did it. If you take a look at the high on August the 7th, that high was 1925.75. The actual intra-session high on Friday, 1928.25. And the low certainly was exceeded from the prior day. So check number two. Let's go ahead and remove that from our box out there. And number three just needs to be a higher close. Well, it most certainly did that. It was a bullish engulfing, and it was a higher close. Now, what does that say? That says, with regard to where support is at, because we really didn't see much in the way of support out here. You see, this is a little bull sash candle that occurred on August the 4th out here. No follow through the next day, so I always I eliminate those as levels of support or resistance, quite frankly. No follow through. Hey, what's up with that? Well, this morning, we'll see if there's follow through. Any higher close today would be considered follow through. Now, if you're watching us on TigerTV or taking a look at my charts out here, if you're listening on your radio or your mobile device at TFNN.mobi, we appreciate that very much. Of course, the live stream can be had by going to the homepage at TFNN.com. Upper right-hand side, you'll see a little box, 3 little smartphones in it. Click on that. This show will stream live. And, of course, the archive of this show is on Channel 9. Now, our friends John Logan, who kicks things off for us here at TFNN, if we utilize his market profiles out there, and you should, and we do, we can see that there's some resistance at that 1940.65 level. Of course, the ES Mini can't trade to that, so we're going to call it 1940.75. Any close above that, and I don't really mean, hey, at 1940.75, but any close above that with any kind of significance. And what would that be? Well, let's just take a look at normal retracement levels. Let's go from the high out here, that little doji candle on July 24th down to the low of last Friday. And what we will see out here is we'll see that, let me just expand this out a bit. We'll see that Friday's session out here made it to where? Made it to that dead cat bounce, that 0.382 retracement, all in one session. That was pretty nice with the key reversal. What was that telling us? It was telling us, hey, it wanted to go try to climb the higher price. That's what we're seeing here this morning. 1926.75 was the 0.382 retracement. But you're asking, hey, Steve-O, where is that 0.618 level? That's the normal level where price could move up to. Well, that'll take us into the 1949 level. So really, the range here of where we ought to see price move to, probably 1941 to 1949 out there. So closing above 1949, hey, that will be very bullish out here, and that would say that price is going to make it back all the way to the level where the market really broke down. That's that wide-ranging bar, which we're trading into right now. That level was rejected, by the way, on a Friday. It was tested and rejected, but right now the ES Mini is trading in there. So closing above that low, which, by the way, is 1923.50, that really suggests and offers, the ES Mini, sorry about that, a move up probably to where it broke down. That's your 0.786 retracement level. Coincidentally, the high is 1965.50 on that breakdown session from July 31st, and 1965.50 is also basically your 0.786 retracement. So it is likely that is going to be the area where it is likely to go to. Somebody's saying lost sound. I'm just going to keep going out here for the next 3 minutes until I get a message otherwise. Now, let's take a look at the weekly chart. Let me switch this over. We'll take a look at a weekly chart out here. When we're looking at the S&P futures, if we take a look at the S&P futures out here, let's take a look at what the S&P futures are doing right now. Is guess what? They're trading right above their TAS market profile unfair low out there. That's at 1925. So we saw a little piercing of it. That week ended July 28th. Is that right? No, yeah. What the heck? Last week was something wrong here with the data, so we're going to skip. We're going to go to a different weekly chart. Let's do this. Let's come and take a look at the weekly chart out here. There we go. For some reason, that data is not correct because the week was August the 1st, right? So if we take a look at the weekly chart, let me get my crosshair out here. We take a look at that weekly chart. There we go, August 1st. We can see that price. Let me try to explode this up just a tad. We saw price close below that weekly unfair low, but really not by a whole lot. More than a smidgen, but not by a whole lot. And then last week, what did we see? We saw that price level tested as a resistance zone. So any close above that, and you might say, hey, what does above that mean? What is that price? I can't read it here off the top of my chart. It's going to be right around where we're trading, quite frankly, right now, right around that 1931 level. Any close this week above that, that can offer on a weekly basis a test of the August 1st highs out there. If we take a look at the last week's candle, not really a doji, more of a high wave candle. And high wave candle, the meaning behind that says what? Says a market is confused out there. Now let's just switch over. Let's go take a look at the NASDAQ. So we've taken a look at one of the weak links out there. Of course, the weakest links really having been the Dow and the Russell 2000. But nonetheless, let's go take a look at the NASDAQ. Let's put the continuous contract on my screen so that I've got enough data out here. Give me a moment. The NASDAQ, if we take a look at it, this still, other than the mere fact that the week ended August 1st, which was a little bear sash candle, it's still as strong as you can get. It is strong like bulls. So as you and I, we go hunting for bulls and bears out here, you can't find much in the way of bearishness inside of this NASDAQ, at least not on the weekly chart. If we go take a look at the daily chart, let's do that out here. Give me a moment to switch over. We'll take a look at the daily time frames. We'll take a look at the market profiles here. Switch to daily. There we go. The daily also held, so the NASDAQ is really strong. Look, if the bears are going to do anything, their battle is right here. It's right here inside of the NASDAQ, because if they can pierce through the unfair low, if they can pierce through last Friday's low, well, that's what would set up an A to B equals CD to the downside. Nonetheless, though, there's been some damage out here. There's no question, because if we take a look at the retracement from the high from July 24th down to the low that was out here on Friday, what you'll see is price so far is only just slightly above the dead cat bounce area, that 0.382 retracement, which is at 38.89. Nonetheless, looks to me like what the NASDAQ wants to do is move up to probably the 39.28 level. But that's not to say there's not going to be some selling and there's not going to be some bears along the way, because it would be hard to imagine that all those sellers are gone when we take a look at these markets. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks had a little sound interruptions there on that first segment, so let me just recap what we discussed out there. We looked at the NASDAQ and the ES Mini. Now, the NASDAQ futures out here, what we noticed is that really on a weekly chart, no damage to speak of. The TAS market profile lows, both on a weekly and a daily, have held. So not until we see a close below, you'd have to now say the swing point from Friday. That low, by the way, is 38.2650. Will there be any significant damage? Now, look, all the damage that was done to the marketplace, all the damage was done during one trading session. This right here, this is the culprit, July 31st. And it was a lot of damage because it went ahead and changed the weekly charts. It changed monthly charts out there. So it was quite a bit of damage. So there's damage repair that's being done. So even though the chart here is still relatively bullish, what we do have to watch for is the retracement levels here. So it's very important that we see. Now, we take a look at the NASDAQ. It's only really made just slightly above a 0.382 retracement. And a natural move, a normal move, no matter what time frame we look at, anything that we look at, the natural move is to get to the 0.618 area. That would be about 39.28. At that level, you're still trading with inside that bar out here, and that's the cautionary bar. That's at July 31st level, and that could really be setting up the A to B equals CD to the downside out here. So we want to see these two moving averages. We want to see a crossover there, get into a bullish formation. They are not in bullish formation right now, and that says to me that first of all, you've got futures trading up nicely here this morning. It is hard for me to believe that the bears are going to pack it in after one day's trading session out there. So we'll see what kind of strength that they can mount out here. As long as we're talking about the Qs, we've got a caller, Richard in New York. Richard, thanks for calling. Thanks for holding. How you doing this morning?
Absolutely great, Steve. Could you help me out in terms of the price action on the NASDAQ? When it opens up, does that include the trading of Priceline? It's down 2% approximately. Is NASDAQ going to drop when the market opens?
Well, it does influence, but at this stage here, I would show that the markets are going to pop because of the futures. So, so Priceline, even though it's having a drop, it's having an impact on the futures. If we take a look at the NASDAQ per se, if we just look at from the highs here from July 24th down to the lows that were put in on Friday, we've seen a nice move, but that bounce has still been relatively tepid, so to speak. And what I mean by that, it's only trading just slightly above the 0.382 retracement. Are you long or short? Or tell me what you're looking to do, and maybe I can provide some additional information.
I have an iron condor currently on the NASDAQ. Also going forward in the future, if you have time to discuss the mathematical formula of how that is quoted. Like, for example, is it subject to manipulation by the market makers, or is it the computers that determines the price? How is that fluctuated? Does it vary according to the different futures and to the different indexes and the different stocks? There's a mathematical formula for price action. Is that determined by one formula, or is it determined by whim of whomever, the powers that be?
Yeah, more the latter. It's a little bit of everything, but certainly more the latter. So when you're taking a look at the cash indexes, they are replicating the actual stock that is being traded out there. So, but what we have to do, this is really all about price discovery. In the futures, they give us a fairly good indication as to what's going on, inside the market, certainly intraday. And what I like to do is identify, okay, what are you doing right now on different time frames? And on the daily time frame, the key level for the NASDAQ specifically that you should be watching is 3930. And that should be a relatively good area of resistance. If you get a close above 3930, this is suggesting that price ought to at least go test the breakdown area, which is the July 31st high. The problem there is that it will also be traded back into the July 24th swing point. So Friday session, the NASDAQ itself has not broken down. There's other than one bad trading session, which is quite frankly true about the entire market out there. We saw a little bit of follow through on August the 1st on the last Friday, not last Friday, the Friday before, but it was really all the damage was done on that July 31st date out there. So I hope that assists you somewhat with regard to your navigating the markets out there.
Okay, well, there's also new regulation of dark pools, like large amounts of trading of stocks. Does that influence, like, if the market makers know that they have, 300,000 shares coming in at the end of the day, does that influence how they regulate the pricing of the futures throughout the day?
No, in the case of the futures, you're just looking at supply and demand. You're just simply looking at buying and selling activity for the most part out there.
Well, is that subject to timing?
We're going to a hard break here, Richard. If you want to hold on, I'm happy to come back to you. 877-927-6648. Dow futures up 75, S&P up about 10. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 40 points, trading out at 16,593. S&P up about 7 at 1938. NASDAQ composite up 18. She's trading at 43.89. Russell 2000 up 5 points at 1136. New York Stock Exchange up 33 points. Gold back a buck, leading the charge. The upside, of course, they're consolidating. Kinder Morgan. So we'll say really leading the upside here. We've got Tesla up 955. We've got Priceline up 1111. Let's go back to Richard in New York. I think it was Priceline, Richard, that you were first taking a look at. Is that correct?
Yes, absolutely. Wow. In the pre-market, it showed down about 45 points, and you're saying it's up 11 points now?
It's up 14 and rising. And so, the futures markets, is really, I guess what we'll call it's a centralized marketplace, right, for buyers and sellers around the world to say, I want to buy today for something that's delivered tomorrow, or vice versa out there. And it's really just an opportunity for some price discovery. And then, when you've got to deliver, then you've got to go ahead, you've got to either buy the commodity, buy the stock, what have you. So then you've got the cash market out there, and the two are settling. So when you've got the real benefit of trading the futures out there is if you are one that believes that there's a lot of volatility in the market and you want to protect your assets and therefore you want to have some stops in place, then you basically have nearly round-the-clock trading out there. And so for the individual investor, the number of contracts that are being bought and sold out there, you're usually in pretty good shape. There's enough liquidity to go ahead and be able to take you out of the marketplace out there. And that would be the real benefit. For me, as a person that's going to help you to identify, hey, what's the market done since Friday, when things opened up last night, what are we doing? Then we start taking a look at technical patterns out there, whether it's the lightning bolt pattern, A to B equals CD pattern, it's going ahead and completing, whether it's retracing back to a retracement level like a 0.618, 0.786. Maybe it's making a Chapman wave peak or trough or some type of utility out there. And, as an example, Richard, on Friday morning, you probably, depending on what time of the morning you might have been up, futures in the Dow were down quite a bit, 100 points or so, maybe around 4 o'clock in the morning. And everybody at that stage would have thought that the roof was caving in, that this was going to be just a horrible day out there. But the reality was, when I went back and I took a look at my tools in my stock chart, having that futures data allowed me to see that the futures are trading lower, but the cavalry wasn't behind it. In other words, price was moving lower, but without all the troops out there. And when it does that, then we start taking a look at for some reversals. We take a look, where are the special forces landing? And what we saw was at 4 a.m. we saw a market low, and then within about 2 hours we saw that the special forces had landed. They were going to go ahead and push price up, and that's why I was able to say to subscribers we're likely going to have a robust rally, and that's really what it turned into. So that's where that futures data is also very helpful in discovering for us where price is likely to head to. Price lines now lead the charge. It's up $37. So can you always trust the futures data? No. But it is a useful tool to help you identify if you are a technical pattern trader. In my opinion, it's really helpful to identify where things are headed to.
Well, Steve, can you please define what do you mean by troops? Is that volume, or how do you define troops?
Well, in the specific pattern that I was referring to, let me go ahead and I'll put this up on the screen for you. And what I'm going to do is I'm going to put the Dow up here, and I'm going to put a 300-minute chart. We got a guy in the Tiger's Den. His name is Saratoga Bob, and Saratoga Bob loves to trade that 5-hour energy drink. That's a 300-minute chart out here, a 5-hour chart. And as it was pushing lower, what it was doing, I'm going to show you the actual trade setup out here. Coming in at 4 o'clock in the morning, and I'm looking at the Dow because the Dow had been the weakest out there. So that was the weak link. And so as the markets are moving lower, I like to take a look at the weak link out there. I also like to take a look at what is going on inside of strength. And as we take a look at that trading session, that very next one that took place as we were coming on the air at 9 o'clock in the morning, a big bullish engulfing. Now, what was going on down there, what I refer to as the troops, is price was moving lower with less relative strength out there. And any time a market either moves higher or lower, in this case here was really with less relative weakness, right? Because it was moving lower. If a price is moving higher and it's moving lower, if it's moving higher with less relative strength, it's telling you don't have the real troops behind it. It's a combination. It's really momentum, because that's really what this tool is taking a look at, is momentum. And I take a look at the markets as being nothing more than a rubber band. And you can stretch that rubber band. The further you stretch that rubber band, that's where we take a look at Fibonacci expansion numbers. The further that you expand that you stretch that, that's where you can get the larger snapbacks. And that's in essence what we saw. So the special forces, I just take a look at it as candlestick charting. It's one of the most basic elements out there, Japanese candlestick charting, which Steve Nissen went ahead and really popularized that and brought that to the forefront for us. And that's what really helps us to identify what the bulls and bears are doing on whatever time frames it is that you are trading out there. And so it was an ideal pattern. Also happened to be one of Basil Chapman's trough G's out there. So it was everything was really in the cards to suggest that even though futures had traded substantially lower on a Thursday night, early Friday morning, that when we saw the signals were out there that says, okay, we're going to go ahead and we're going to snap back. That's how I take a look at, where the troops. I'm looking at the troops as bullish and bearish candles, and is price moving lower with more strength or less weakness out there?
Well, they're in the question, Steve. If you're saying that the latter of the prior question is it controlled by the powers that be, aren't they looking at the same thing you're looking at? So if they see that relative strain of momentum is not in the cards or in the troops, as you say, why would they trade the futures down lower? Because they know that you and your crew, are going to see the same thing and hop on. So why would they trade it lower if they're looking at the same thing you're looking at?
Well, first of all, the market is all about psychology, right? So it's all about fear and greed out there. And so who knows, who was it that was trading out there? I would have to say that the individuals that utilize the basket of tools that we share with you here at TFNN, whether it's myself, whether it's Basil, whether it's Larry, whether it's Tom, David, John Logan, Daryl Martin, if you utilize that basket of tools out there, they actually are giving us the signals as to what the markets are doing. So we don't really, we're kind of agnostic as to the actual chart itself that we look at, because this pattern works on all charts and all time frames out here. So, so you say, why were futures being traded lower? Fear. You had the fear, the U.S. Who knows what that fear was? It was, heck, there is such a basket of fear out there. You can. It's a hodgepodge. You can choose anything. I mean, there's a lot of scary stuff going on in the world, don't you think?
Absolutely. So, Steve, really, what I'm trying to ask is, of all the millions of people that trade the markets, there's not one place they can actually Google and find a mathematical formula for price change.
Well, I think the mathematical formulas. It's on the charts. It's on the charts that you see. That's the mathematical formula.
What's the substance behind it? If I want to know, is supply and demand, how is that relative? Is that subject to interpretation of the market makers? I mean, I'm trading the markets, but nobody can tell me what I'm trading in terms of the formula.
I would say it's really all about buyers and sellers, and are there more prices are going to move lower if there's more sellers. I don't want to make it sound simple, but that is, that's really the truth. Then what our role is, at least what I consider to be my role as a tech, because what you're looking for is you're looking for kind of what I hear is more of a, hey, what's the fundamental reason behind price discovery out there? And that's really what, and I dig that question, because, Richard, that was the whole thing that got me into technical trading. Because I don't know if you've ever had this experience. There was a time back in 2006, I would have 40 or 50 positions on at one time for just one of the managed accounts that I had, my own personal accounts out there. And I would have some stocks that were just simply fabulous stocks, like a Priceline. And, just moving higher. And I would wake up the next morning. They would come out with great earnings or what have you. And guess what? The stock was cut in half or dropped by 30%. Have you ever had that experience?
Oh, absolutely. Absolutely.
And in my case, the first time I was like, okay, now I'm a CPA. That means I can cut, paste, and assemble with the best of them out there. I can go take a look at a 10K, a 10Q, a S1, you name it, MD&A. I can go read anything and understand, what's really going on inside the markets. When the markets were moving lower in 2007 to 2009, mark-to-market accounting was a real problem for the overall industry. So, but the problem is that no matter what fundamental knowledge that I had, it didn't help me with the price discovery. What helped me with price discovery after a few times, seeing prices cut in half, guess what happened? I started learning. It was 5 minutes worth of listening to Tom O'Brien, my one of my best friends and business partners. He said, "You got to turn on this channel, turn on this radio station, listen to this guy." I turned it on. 5 minutes later, I said, okay, this sounds like a place where I need to go. I signed up for a master trader course the very next week. I knew nothing about technical analysis when I first signed up, but I knew that I wanted to understand why did price drop to where it did. And what I found out there, that's where we take a look at volume. And when things do drop, they will fall back to typically a volume area. And the reason that they do that is because that's the last time that you really had any kind of support of large institutions, not you and I and folks like that, Richard. So if we take any stock that is dropping here, I'm going to look anything. I don't have anything with a huge percentage here this morning, but I'll take a look at the largest percentage I see here. Looks like WBAI.com. Yeah, that's a pretty big daily chart down here. And what I can tell you is if this continues moving lower, where this is likely headed to is this high volume low out here. It sticks out like a sore thumb, and that would be the price level from the trading session of May the 7th. Now, the only thing getting in the way, and that's a volume there of about 1.5 million shares. Now, the only thing getting in that way is that you had a bunch of buyers move into this equity here on July 22nd. But if those buyers are not there to support this equity, price will and should fall back to that high volume low. So take a look at any stock chart that you want. Now, what I've learned is the most fundamental aspect of where price is moving is really what are the buyers and sellers doing. It's not what I read inside a 10Q. It's not what I read about what the CEO is saying. It's really what are the buyers and sellers doing out here. And that's where technical trading, taking a look at the number of different tools that we share, volume is really helpful to understand why price then falls to where it did. And that was really where I began my analysis as to price discovery. I hope that helps.
Absolutely. That helps. Absolutely, Steve. Thank you so much. Have a good day.
Hey, you bet. And thanks so much for the great questions. That was Richard in New York, and I hope that assisted you as well. You know, technical patterns, people say that you can't time markets out there, and I don't think that is true. In fact, I know that is not true out there. And there is just simply, folks, there's nothing more fundamental than what buyers and sellers are doing inside anything that you trade out there. So go back, take a look at your portfolios. If I could pass along, one piece of advice, I'm not sure which one it would be, but why don't we just use the one that we just talked about? Go back and take a look at your portfolio and identify where those high volume bars stick out, because those are the ones that you want to be paying attention to. It's just like if we take a look at Tesla. Tesla's trading up here this morning. Now, Tesla's trading out at 258.69. And we've noticed on Tesla, what you want to find inside any chart you're trading, you want to find something like what Tesla had. And Tesla had a high volume high. It had a high volume breakout here. And that was a trading session from February 25th out there. If Tesla does fall out of bed, all we have to do is look for the high volume bar to the downside. And in the case of Tesla, that would say if it breaks below the last breakout area, which is the February 24th level, Tesla's got volume. Well, first it's got volume down here at a swing point area from May 8th. So if Tesla falls out of bed, that's the level you'd be looking for. That's in the 178 range. That's a swing point with volume out there. In fact, whenever you are trading or investing and you're making a trading decision, you're trying to understand where price is likely to go to, what you want to do is you want to look for those swing points. Those are the key levels where you see price make some type of significant change in price. And as we take a look at Tesla, that's really what we're looking at right now, right? Because it's dealing with a swing point from February 26th. And that high is at 265. And the volume out there is 24 million shares. Likely, Tesla, unless it's coming into that level with more than 24 million shares, is likely to stall up at that high. Does that mean that it's done to the upside? No, not necessarily. But if it can get over that level, get over 265 with more than 24 million shares out there, then you've got several confirmed A to B equals CD patterns to the upside. We can really project where Tesla is likely to go to. So if we take a look at today's trading out here, 1.4 million shares in the last 18 minutes of trading out there. So it's very important. It's trading into that swing point as we speak here. It has been for the last several days. It has moved into that swing point with lighter volume. 9 million specifically on August 6th. 7.4 million on August the 7th. It tests that level of 5 million on Friday. So today it's up in there. If it can get above that level, meaning the 265, then what you've got is you've got a couple A to B equals CD patterns. In the case of Tesla, over the longer haul out here, if we take a look at the A point, I'd come all the way back to that swing point low from November 26th. That would be our A point for the A to B equals CD to the upside. Let me see if I can I've got to push the right button. Let me do this here real quickly. Your A point is at November 26th. Your B point's that swing from February 26th, your C point out here, down on May 9th. If Tesla gets over that area with volume, 326.12 is its next target. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 40 points right now. S&P is up 7. NASDAQ Composite up 18. New York Stock Exchange up 36 points out here. The key today is going to be net advancing issues. Right now we're at 1451. Let me come over to my worksheet here. Give me a moment to pop that up on the screen. Not on the screen, but off screen at least for me. The key number today is 1086. Very interesting. Now, today, if you see net advancing issues, we got a lot of time left in the trading session, but you see a close above, not a close above, you see more than 1,086 net advancing issues. In fact, let me do this out here. Let me put the New York Stock Exchange on my screen right now. If we see more than 1,086, here's the NYA, here's the New York Stock Exchange, just to give you an idea with regard to what the market also did on the wider swath last week as prices were moving down. If you take a look at this is a rising price channel. Now, inside the rising price channel, another great tool that our man Bud Rolfs has taught us over the years is to use what is the essence of price. They've always used the body of the candle is truly the essence of price. The wicks, the shadows, upper and lower, that we have, those are nothing more than the extreme emotions of a market. So what we do is we connect the body of the candles to help us identify where prices moving to the actual real price channel trend out here. In this case here, the New York Stock Exchange was not able to pierce that rising price channel coming off of the lows back here, significant lows back in June of 2013. But if you look at the bottom of the chart here is showing us the McClellan Summation Index. It's showing us the price oscillator. That price oscillator gets above zero, and all it needs in order to do that today is 1,086 issues. That then goes ahead and puts the New York Stock Exchange into a full-out bullish mode out there. So we'll be watching that. In the meantime, let's go to Steve in Nashua. Steve, thanks for calling. Thanks for holding. How are you doing this morning?
Sure, Steve. Great. Thank you very much. I know you don't have too much time there. I was just interested in your take up or down on GPL.
What's the time frame? What's the time frame that you're looking at?
I'm actually looking at a 1 year weekly right at the moment.
Okay.
To buy or whatever you mean.
Wait, yeah, you're looking at it to hold for a longer term, but you're looking at a weekly?
No, a swing.
A swing trade. So a swing trade here, what I would say is that Great Panther, and it looks really, it's a good-looking stock chart out here, and on a weekly basis, it's got some real nice volume up here at July 7th. What I would do, it's trading at $1.26. Your better buy here is right around on the weekly chart, says 109. Or if this closes above 138 out there, you're going to have to really see. But I'm going to switch over to a daily chart.
Right.
On the daily chart, let me just see what prices pop up for me here. Come on, baby. Work for me. We don't have time. Okay, 120 is your so 120 becomes your buy point. You want to watch to see if price pulls back in that July 24th candle. You want to see it doing it with less than 941,000 shares. If it does that, 120 becomes your buy point. Resistance is about 146.
Absolutely. Hey, you guys do great work there. Keep it up.
Thank you. Thanks so much.
Thank you.
That was Steve in Nashua, and that was a Great Panther. And the only reason why I was quick there was because we've only got 20 seconds left in the trading session. I want to be able to get to Steve. So, folks, if you're off to start your day, thanks so much for joining us here at TFNN. Don't forget, we've got live programming each day. That is for 10 hours. Our man John Logan kicks things off at 8 a.m. And I want you to remember this. And that is that you have an amazing power within yourself. And that power, it's so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces. But most of all, folks, it'll create loving families, fantastic loving families. Thanks so much for being a part of the TFNN family. Have a great Monday. I look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.